What's going on, everybody? Cullen Gandy coming at you with another video about personal finance and mortgage finance and everything to do with getting you down the road to where you want to be. Today, I'm going to come at you with another mortgage origination related video, and that is how to maintain a stable business as a mortgage loan originator. You've done everything that you need to do at this point to get in the position of the mortgage loan originator, and now you're just asking yourself, well, how do I make like a set amount of money or kind of near a set amount of money every month so that I can count on that a couple years down the road when I want to get my own house? So if you're watching me, chances are you're interested in becoming a mortgage loan originator, and this is generally a question that has to do with what's called pipeline management or sales pipeline management. This is the things that you can do with your leads and your prospective clients that can ensure that you can have a sustainable, profitable business month after month, year after year. And there is a little bit of a trick when it comes to pipeline management, because some folks are really good at the beginning of the process and then they fall apart during the middle and end of the process, and that can kind of leave them a little bit frustrated, thinking, oh man, this started out so strong and now I just feel sort of pulled down in a quagmire and maybe this isn't even for me. And this has happened to a lot of people, including, me at a certain point. I was like, man, I've got so many things to do, so many emails to respond to. Do I even really want to do this? Follow these steps and you're going to be sure that you're going to have both a profitable pipeline sales-wise, but also you're going to preserve your own sanity too. Because at the end of the day, if you have an unruly sales pipeline, if your clients are all over the place, then you're gonna have a bad time. You're gonna wish you're gonna be doing something else. And usually how you're going to interact with those people is going to be through what's called a CRM or client relationship management type of software. So understanding your CRM is key, and when you do understand it, these are the ways that you can maximize on your early pipeline management when you're just getting started as a mortgage loan originator. Now, there are different ways that you can interact with people on a CRM, and there are multiple different CRMs, some that people swear by and some people don't like so much. I personally have a lot of experience with things like HubSpot, Salesforce, things like that. Things where everything is sort of metered out for you and you can really be organized about knocking out your day-to-day activities. So the first thing you're going to want to do is really become very intimate, get a really good knowledge of your CRM system, because it's going to be your best friend. It's going to make your life easier. If you can learn the tricks, if you can learn the tips around your CRM, maybe it's going to cut your time where you're having to figure things out on the fly in half, if not even better. And so you're going to get a lot more done in the same amount of time. Usually, this can be provided to you as the salesman, whether or not it is on YouTube, like if you're finding things on my channel, or on the CRMs themselves. I've found on both Salesforce and HubSpot, I've found that there are entire courses listed to do each individual process with all of your clients, interacting with each of the types of clients, and even with the operations staff from your, directly from your CRM. Now, if you work for a large online lender that sort of pays you in a very traditional model based on units or based on a tiered pay structure with commissions over a draw, chances are you're getting some leads fed into you, if not most of your leads are being fed into you through lead aggregators like Bankrate or LendingTree or something like that. This can make pipeline management a lot more streamlined because you're not having to hunt for the leads. You already have the leads in your CRM. You just kind of have to parse through them. That leads me to my second way of managing a good pipeline, which is to say you have to kind of triage what your leads are and how you're interacting with them. As an early in your career mortgage loan originator, you want to be spending most of your time hitting those leads hard, right? Calling each of the individual leads that you're assigned or that you get is really quite important. Obviously, you want to sort of prioritize those leads that have come to you more recently. So if you have a lead that's come to you in the last day or so, that's going to take priority over some leads that might have been touched by other officers in the past, or leads that have kind of gone stale because maybe nobody got to them. Not everybody's as industrious as you are. When we're hitting the new leads, make sure to follow a formula so you're never forgetting how you're interacting with these new leads. What I like to do is I like to do the old 3, 3, and then 1 rule. How does that work? Well, the first day that I receive a new inbound lead, that's a same day lead, I hit it 3 times during the course of the day with phone calls. So once, if I get it in the morning or if I received it the earlier evening, I'll hit it that morning. If I don't get an answer, I will hit it again in the afternoon and perhaps probably leave a message. And then I'll hit it again in the evening right after work, say 6 or 5:30 in the evening. That way, you've sort of covered all your bases to see when your possible client could be engageable, and so you can go back and try it again the next day. Also, what you're going to want to do is you're going to want to send 1 email that very first day as soon as you get the lead into your pipeline to make sure that you've made contact in every possible way that you can. Then you do it again. It's the 3, 3, and 1 rule, right? So the second day, we're doing 3 calls again. We're hitting it hard. We're not sort of relenting on these folks. They asked for it. You got to give them permission to get that mortgage, right? So we're doing 3 calls, maybe mix it up, but try to divide it up into thirds of the day, right? Maybe late morning this time, and then early afternoon, and then late evening. Why not, right? Chances are, if you get 6 calls in within the first 2 days, maybe they'll be pissed about so many calls, but chances are you're going to get them and you're going to be able to pitch them. For you mortgage loan originators who are self-gen related, on the lead end, that is to say that you have to go out and sniff out the leads, things get a little bit more complicated. You can't necessarily rely on the CRM from the get-go. You have to rely on your own productivity and your own skills for organization. That means that you're going to have to sit down and map out all of your initial lead possibilities, right? Sniff them out, see who might be interested, and then hit them the exact same way. And you can do this either by contacting them directly, feeling the waters out, and if they're interested, stick them in the CRM, right? Say, hey, look, I've got a deal that might be good for you. When is a good time to call? And then just hit them. Hit them like any other lead, right? Make sure that you're making as much contact as you can within the law, right? You can't call somebody who hasn't solicited you for, the call unless, there's a reasonable expectation that you're going to be able to sell them something. So definitely, follow the law, but that being said, if you get a lead coming in, you want to hit it as hard as you can. So 3, this goes along with you folks who have, obviously getting your own mortgage leads in. You're going to want to hit that initial stage, which is to say you're going to market yourself, right? That is the biggest part of the initial pipeline of the self-gen or self-lead generation mortgage loan originator. What I like to do is I got a map of my area where I conducted business and I drew a 2-mile radius circle around it. And I hit every single real estate office in that circle until those people never wanted to see me again. And, on the off chance that one of them had a deal that they wanted to throw my way, because, you got to take into account these realtors have heard from probably several other loan originators, and you're just one in a field of thousands, right? So you need to be persistent. But chances are maybe you'll hit somebody and they'll throw you a new lead, and then you can gen leads that way. And those sort of compound over time. The more persistent you are, the more initial leads you're going to get those realtors to give you. Another way you can market yourself is just by doing it on social media. This is something that I like to do, and I incorporate my artistic side. As an opera singer and a former actor, I would get your headshots done. I would also set up like advertisements on Facebook or something, just saying, whatever it is that you need. If I can help you with anything, don't hesitate. I'm a mortgage loan originator. I can help answer any questions you have. Get yourself out there and be persistent about it. Make a marketing budget, stick to it, whether that means you're going to coffee houses in your area and engaging with people directly that way by maybe paying for their coffees, which is something that I've done also, or just meeting people out on the street, asking them about themselves, and then just sort of steer the conversation the direction that you think it could go based on the information they get back. People generally want to connect with other people, and it's uncommon, especially in the United States, for people to reach out to people that they don't know. So once you do that, you've already broken a really, really big barrier, and you've sort of possibly forged a relationship with somebody who could give you not only their business, but all the business that they have access to with their friends and family, just from the fact that they now know you, and they know you as somebody who is sort of forthcoming, right? Somebody who is a go-getter. All right, so now you have set up your initial pipeline, you're making the calls. Hopefully you are just such an adept salesperson that you are converting those leads into clients, into closed deals, into cash, into your pocket. Now, how does that translate into repeat business? How does that translate into predictable amounts of closings and fundings every month? Well, this is where it can get kind of hairy, right? Because the more you are focusing on generating business, converting potential clients into engaged clients, the less you are actually engaging with already current clients or clients that are later on in the loan process, right? So you're gonna have people eventually emailing you or calling you, asking you questions about the process or asking for updates. And if you don't have a team underneath you, which is the case in a lot of companies, this could become a lot of time sort of spent on the wayside, sort of going through your operations to your clients. And I know this is something that I particularly struggled with. One thing that's really important to note is that you really kind of want to measure how much business you are generating on that front end. You know, if you get 100 new clients and they're all super psyched about you and they all have their own individual financial profiles that all really kind of need your specific attention, then you're going to have a bad time when you need to generate more business, but you have 100 individual, very singular problems that you need to solve. Don't generate more business than you can handle throughout the entire phase of the pipeline, right? That's rule number one in my book. If you want to just start out, you think you can manage a group of 30 people over the course of a month or 2 months or 3 months, right? Just set that in your mind as your limit. You've got 30 clients. You're going to pay attention to those clients until you can either feel like you can responsibly sort of lead them over to one of your processors or one of your associate loan officers, and then generate another batch of leads into potential converted clients until you hit that limit again, and then do it again, and then do it again. That way, you're sort of filtering from an initial lead pool that you know is manageable and that you can actually walk all the way through the process if you need to do that. And the good thing is usually you're not going to have to do that. But you know that if you need to, you can. As you become a more experienced mortgage loan originator, this is something that you know that you're going to be able to expand over time, right? So then we know that, you know, from 30, maybe you can try stretching to 40, and then from 40, maybe to 50 every quarter, right? And now you're getting to a point where you're making possibly, you know, thousands, if not tens of thousands of dollars in a month, because you know what your limit is at the beginning of the pipeline process. What I've seen time and time again is really, really snazzy, really, really savvy salespeople come into the mortgage industry, sort of really knock it out at the beginning of the phase and sell and convert a lot of leads into clients, like 150, 200 people in the course of like a quarter. And then they burn out after about 6 months, 7 months, 8 months, because they just don't have enough hours in the day to service all of those clients. And then you have clients getting pissed because you're not answering emails and you're not really, you know, answering any calls. You're not calling people back. So that being said, with each cycle, whether that be every month or every quarter or, you know, bi-quarterly, know what your limit is, know how many people that you can service in a given time, and I'm no stranger to that feeling of being overwhelmed, and then stick to it. There's no shame in starting small and then expanding slowly over time, especially if you're a lead self-generated mortgage loan originator. This is something that you're going to want to get used to anyway, because you're going to have to rely on referral business, repeat business, or if you want to even specialize, you could even specialize by getting into particular industries. I know mortgage loan originators that only work for, veterans because they know VA loans the best, right? And they know how to knock it out of the park with those type of folks. They know the kind of social cues that work with those kind of folks, and they're happy to be, a part of that industry. You can make a killing if you know what you're capable of before you start, right? So now I want to talk about the later, middle, and late portion of the sales pipeline with your clients, and that is funneling them into the closing process, holding their hand through the closing process, and getting that loan funded. Especially if it's a purchase, it's very time sensitive often, and things can fall apart really very quickly. And it could end up, throwing egg all over your face. And you don't want to be the guy with egg on your face when you had 3 days to close and then something else came up. One really great way to manage your pipeline is to be proactive about things. I'll give you an example. One thing that I always try to do when it becomes a converted lead into a client is I try to get them ready for all the disappointments that they might experience during the later part of the sale, right? During the closing and funding part of the sale. Whether that is asking them when their insurance renewal on the house is, because that's pertinent to things that they're going to have to pay at closing. Or whether they understand, the difference between a 15-year payment on a 2.74 and a 30-year payment. Because I had one client that came to me cold off of the internet, sent in all his paperwork. I sent him the email, and we didn't really have that much contact over the phone until the final day when he realized that 2.74 at 15 years isn't going to be the same as 2.74 at 30 years. And so even though I called him before and sort of went over all the numbers and sent him all the numbers and the loan estimates and closing documents, it's really important to get these people clear on what expectations should be and how we can mitigate, the frustrations that can come about from confusion in the mortgage industry, because there is no lacking of confusion in this industry. So the more clear you can be in a proactive kind of way, the better your chances are of taking that client that you've fostered over the period of months and converting them into a funding. And then the final part of the pipeline management process is just babysitting that closing, right? You really want to babysit the closing. Now, sometimes this can really be more or less frustrating depending on how competent of a team you have on the closing end, on the processing end, on your management side, right? And also, if there's a buyer, how competent the buyer side real estate agent is, and the seller, how competent they are, So you really want to be in touch with everybody that you can at that last point, right? This is something that I don't like to leave to assistant loan officers because what if something goes wrong? If you're the guy that's going to get paid, maybe you're the guy that's going to want to make sure these things get done. For an example, I had closing specialists at my company send out final closing disclosures without properly adjusting the escrows and things like that, or I've had them not add in the particular county's tax structure. They added in another tax structure, or the title company, didn't send the appropriate documents in time, and so I'm on the phone with them. Whatever it is, you want to be on high alert when it gets to be that last 4-day period before a closing for a client to make sure that that you're going to be there all the way to the end for them. One really great way to do this is right after a loan gets approved, make sure that the client knows that once this thing gets done, you're going to have to, schedule that closing in a period of time that is conducive for the closing. What does that mean? Well, people can make a lot of mistakes, and sometimes you can't do anything about it. But if they're going to make mistakes, go ahead and make sure to tell the client to schedule the closing later on in the day. So what I would always do is I'd say, hey, look, we're a mortgage industry and a lot of things are kind of hit or miss or messy or whatever. What you want to do, schedule that closing after 1 p.m. my time. That way, if something goes wrong the day before, or hell, I've had things go wrong the day of, we can get it done for you with everybody involved, the title, the closer, the processing that day, and still get it closed for you. I cannot tell you how much time this has saved for me. So to recap, You want to make sure that you are generating leads. You want to make sure that you are comfortable with the amount of leads that you are converting into clients. You want to make sure that you can have that amount of leads that you're generating every period, whether that is a quarter or a month, as well as be able to field questions and concerns. And then eventually you're going to want to make sure that you are on top of, or you are delegating properly, that closing process, babysitting the closing so that you can get it turned into a funding, which turns into that fat commish that you want as a mortgage loan originator. That's it, guys. That is pipeline management in a nutshell for the mortgage industry, and I will go into different aspects of that as they come up. But let me know, what kind of part of this process is really getting you frustrated? Or what part of the process do you anticipate is going to be really difficult for you, and how I might be able to help you address it? Let me know in that comment section below. And if you enjoyed this video, which I hope you did, please hit that like button. Go ahead and send me a subscribe, because you know I love to inform you of all this mortgage knowledge. And I will see you in the next one. Peace, guys.